Russia's central bank launched one of the biggest banking bailouts in its history on Tuesday, saying it would rescue troubled private lender Otkritie, which has suffered a sustained run on its deposits amid worries about its loan portfolio. The central bank said it planned to tap its own funds in order to become a major investor in Otkritie, the country's seventh biggest bank by assets according to Interfax data. The bailout is likely to stoke anxiety about the wider state of the Russian banking sector, fueling speculation that other big banks may have similar problems. It also raises questions about the central bank's supervisory performance. Otkritie is the country's largest private lender by assets, according to second quarter data from Interfax, and some of its shareholders are connected to major state entities, a fact that prompted some analysts to believe it was too big and influential to be allowed to fail. On one hand, the central bank's comment on Otkritie is a relief for the market, said Dmitry Polivoy, chief economist at ING Bank in Moscow. On the other, the overall situation and the central bank's action raises questions about the quality of the central bank's supervision of one of Russia's largest systemically important lenders. The central bank did not say how much it was spending on the bailout, but said it planned to take a minimum 75% stake after evaluating Otkritie's financial position. Until now, the biggest banking bailout in Russia was a 395 billion ruble, $6.7 billion, rescue of Bank of Moscow in 2011, Russia's fifth biggest lender by assets at the time. Otkritie Bank, part of the wider Otkritie Group, grew rapidly in recent years, snapping up banks such as Nomos, non-pension funds and insurers, and even the diamond business of Russian oil producer Lukoil. But Dmitry Tulin, the central bank's first deputy chairman, told a news briefing that its business practices had been questionable. This expansion was financed via borrowing and key risks were taken, he said. The bank's operations are connected to higher risks and need to be seriously changed. Tulin, who took up his role at the central bank supervising the country's banking sector in October 2016, said he did not expect turmoil in the wider banking sector in the near future. He said the central bank had known of Otkritie's problems before he began supervising the sector. The regulator will now assess the bank's provisions and capital, a process that will take up to 3 months. If the bank's capital is deemed to be in the red, Otkritie shareholders would lose their ownership rights completely. The capital disclosed in the previous report seems to have been significantly higher than in reality, said Tulin. According to Otkritie's latest financial statements, for 2016, it had a non-performing loan ratio of 7.5%, while its Tier 1 capital was at a healthy 12.3% comparable to the country's top lender Sberbank. Its capital ratio, last disclosed as of August 1 under Russian accounting standards, was above the central bank's requirements. The central bank said Otkritie's owners and executives had agreed to cooperate to help restore the lender's balance sheet. In the meantime, Otkritie and its businesses would operate as usual, it said. Otkritie said it welcomed the bailout. This is positive news for the bank's clients and the whole banking sector, Managing Director Alexander Dmitriev said in a statement. I want to underline that the bank's shareholders have turned to the central bank themselves. The central bank is trying to clean up the banking sector, shutting down banks it believes pose a risk to the system. It's revoked the license of Bank, a top 20 lender, last month after saying it had falsified its accounts. Otkritie's problems came into focus in early July after Kremlin-backed rating agency Accor assigned the lender a BBB rating, citing the low quality of its loan portfolio. Investors began to sell off Otkritie's shares this month and Moody's put its ratings on review for a possible downgrade soon afterwards, saying it was concerned by the elevated volatility of the bank's customer deposits, which puts pressure on its liquidity position. In June and July, Otkritie's customer deposits contracted by 435 billion rubles, $7.40 billion, equivalent to 18% of the bank's total liabilities as of June 1, Moody's said. The central bank said that corporate clients withdrew 389 billion rubles from the bank between July 3 and August 24, with another 139 billion taken out by retail clients. Ruble liquidity in the Russian interbank market rose unexpectedly this month as the banking sector started borrowing more from the central bank, seen as a symptom of deteriorating trust in the interbank lending market. At a certain point, the bank owners realized they couldn't solve the issue with capital on their own and turned to the central bank with a proposal to start discussing financial rehab by